Okay, hi guys, we're live again. Perfect. It's been a long time. I've been live again on YouTube. Uh, Give me a confirmation. The video and the audio is good, and we can get started. Mm, okay, everything looks right to me at least. I think it should be on internet. All good, awesome, better. Guys, I'm not good with all this. Not sure how do you increase your stream quality here. If you can just let me know in the comments, we'll do that. Yeah, sure. We can stream better quality. Just let me know how do we do that on OBS, I guess. Yeah. Okay, stream settings. I think it's should I increase this? Perfect. Let's not waste time. Cool. So we'll get back to the analysis where we stopped. Okay. Now I'll just give you a recap on what exactly we were discussing. Now, when you speak about technical analysis, it is divided into not exactly divided, but there are different methods on how you can analyze a certain stock. Now, when you speak about analyzing a stock, it can fall under 3 to 4 conditions or 3 to 4 methods to be specific. One is completely based on price action. The second is based on indicators, purely indicator based. Third is a mixture of price action and indicators. Now, what do we understand by price action? And before we go with that, there are three important topics that we want to cover today. The first is going to be how do you analyze a certain stock without having a complete knowledge on technical analysis. Plus, we'll also see what is the concept of day trading, what is scalping, and what is the best way of getting into scalp trades on daily basis, and things like that. So when you speak about analyzing a certain stock uh, without having a complete knowledge on technical analysis, this can be done for short term and long term. Works really good for both. But if you want to do day trading, it's not possible with this, because for day trading you have to get into a lot of different complexity and understand various dimensional viewpoints on before you take a trade. So this is only for short term, or it is only for investing. Okay, cool. Let's get down to this. Again, ignore these indicators. I'll explain you what that is later. Now, when you talk about price action trading, now price action involves studying the price momentum on a certain stock on a certain chart. You try to understand where has the price given you a move in the market, or where has the price where exactly it is reflecting or giving you a momentum that you can look for. Okay. Now let's say, for an example, the current price is bullish. Let's say we have a bullish run in the market. Whenever there's a rally that continues, okay, either the rally is going to be a bull rally. Now what do we understand by a bull rally is nothing but a bullish or an uptrend rally, a positive rally in the market. On the other hand, you have a bear rally, which is nothing but a negative downtrend in the market. Okay, bull indicates the positiveness in the market, bear indicates the bearishness or negative impact in the market. Now we have this bull rally going on. At some point of time, there has to be a reversal in the market. Okay, now what do we understand by a reversal? Is at some point the rally that is currently running is going to stop, and there will be a reversal in the market or a beginning of an opposite rally in the market. Now there are just two types of rallies. One, it's going to be a bull rally, or it's going to be a bear rally. The price will go up or it'll go down. There is no third dimensional view on it, right? So on a running rally, like a bull rally, there will be a point of time when there will be a reversal in the market, and that reversal will happen at one point in time at one level. Okay, so you can mark that level. We have done this over here, right? This is where the price started reverting. And on the lower end, again, the price started reverting on so many different areas. Whenever the price came back to this zone, there was a reversal. Okay, a couple of times, 6 to 7 times. Now, this is how you find impact zones in the market. Now, what is impact zone? Impact zone is a collection of multiple swing highs or swing lows at one point in time. So at this certain zone, we have around 6 to 7 touch, okay, the price momentum touch here, and this gives us a confirmation that this is a very strong impact zone. So it's not exactly a line, it's an overall zone at this point. Okay, so in the future, now this is for a lower end we are talking about. On a higher end, what do we see? We see that the price again came back to this zone, reversed, it went as high and it came back to this zone, there was some reversal and it gave you a breakout. Now breakout concept is, we'll discuss it later. Now over here, we also have, smaller reversals. We have one reversal here, we have one reversal here. This give you a fake breakout kind of a move. We have another reversal here, yes, we can consider that as well, and you have a breakout and there is a support reversal here. Now the problem with these reversals are you have higher moves ahead of them. Okay, if you want to consider these reversal, we exactly cannot have a strong hand on these because we have reversal on a higher end. So you always have to look for major levels. So this is a level, this is an impact zone, but it is not as strong as the ones on the top. Okay, so we are not considering that, right? So what did we get till now? We got two different impact zones in the market. One is on a higher end, another is on a lower end. So this is your higher end, this is your lower end. Now once you find out these impact zones, okay, now you're in a position to understand if there is a price momentum coming by, somewhere close to these levels. Okay, if the price is coming down to this level, you will see positiveness in the market, because in the past, whenever the price came to these levels, there was a bullish move or a positive move. So this impact zone that we have is called a support in the market. Okay, impact zone where if the price falls down to it, it gives you a bullish move. You have your bullish move multiple times demonstrated here. Now that is called a support in the market. Again, the price reverts, it goes high till your higher level, and if there is some bearish move or a negative move being formed whenever the price hits a certain zone here, that is called a resistance in the market. Okay, we'll take this out. What is it called? It's called a resistance in the market. So these are the two concepts of impact zones, one being a support, another being a resistance in the market. Now this was done on 15 minutes analysis. Okay, let's do the same on a higher time frame, like a really high time frame. Like we'll consider a couple of years for the same. Let's say we open one day for an example. Okay, on 1 day time frame, what are we going to do again? We're going to find these levels. Now here's a very important point that you need to understand, that these levels are not straight lines. Okay, as we drew here, these are not straight lines that as soon as the price touches this line there will be a reversal. No, these are zones. Okay, the price can react anywhere between the zones, on a higher zone, on a lower zone, anywhere between these zones, the price can react. Now we understood the concept of support and resistance, right? Now how do we draw them? Now we'll try to see where are the swing highs in the market. You have your one high here, you have another high here, third high, fourth high, wick, wick high as well. So there are multiple touches here on the top. So we're going to consider this as a zone. So we'll see the low which is formed here and the low which is formed here. And we'll see the high which is formed here, okay? Somewhere close to this. You can correct it a little as much as you want. So this is the impact zone that we have in the market. Now let me ask you, what kind of an impact zone is this? Just let me know in the comments that I understand that you guys are getting the concept. Yeah, we'll speak about different topics. You guys have your questions, we'll talk about it. For now, we'll stick on to the concept. What kind of an impact zone is this? Resistance, simple as that. Now again, on a lower end, how do we draw? Okay, now let's say you have your levels here. You have your first low here, you have another low here, you have another one here, another one here, another one here. Now you can draw two zones here. Okay, let me take these out. And you can draw two zones here. One zone is going to be this, another zone is going to be this. It's not wrong, it is right. But if you want to understand things on a major level, you will see that if you go with this level that we have here, how did we mark it? You have your first touch here, you have your second touch, you have multiple touches, a lot of touches here, the wick touch that you have. So this is a good level, but again, on a lower end, you have another level here, right? Now, when you talk about two levels being present in the market, the first level, yes, it is strong, but if there's a level, closer to it, on a lower end, it's going to be below, on a higher end, it's going to be above. If there's a level closer to it, that's going to be much more stronger than the level that you have here. If the price is dropping down to this level as we have here, very high possibility that it will go back to the next level as well, right? So we're going to consider major for now, major levels. So again, these are not levels, these are zones. I mean, proper zones, right? So we have these zones marked here. Now let me ask you, what exactly is this zone that we have on a lower end? I think the difference between my talk and your reply sums up to 6 to 7 seconds. So I'm going to wait. Perfect. It is support. Simple as that, right? So now that you're clear with the concept on how you understand support and resistance, make this point very clear that no matter how long the stock performs, does not matter how many years from today the stock performs, these zones that we are marking today will definitely work in the future. It will definitely work. I'll show you an example. Just say we go with 1 week. 1 week is like a very big time frame. Right. Now let's start marking these zones again. Now can we consider this as a zone? One touch, second touch on the high. Can we consider this as a zone? Multiple touches and multiple touches again. Let's say we consider this as a zone. Yes, Adarsh, we'll explain resistance again, no problem. You have this zone again, and on the lower end, we have this zone again. Now look at how beautiful it is, okay? It is really beautiful to see that even after a decade, even after 10 years trading in the market, it still respects few zones, right? We'll get into it. Again, we have this zone here. Now, we have understood what exactly is support. We know in simple layman terms, if the price falls down to support, it's going to give you a bullish or a positive move. Similarly, resistance, if the price goes up to the resistance, is going to give you a bearish move. Now, if there are possibilities, like high possibilities, that these levels are broken in the market. Okay, these levels can be broken in the market in the sense the price can break through your resistance and go higher. The price can break through your support and go lower. Right? So when there is a break in the market, what happens to the price? What exactly changes in the market? Now, when there is a break from your resistance level, now what exactly is this? When the price was trading here, this was a resistance. What exactly happened when the price gave you a break? Now, when there's a break from a certain impact zone, the level changes to its opposite form. Okay, if you have resistance at a point of time over here, if there's a break from a resistance, the same level which was resistance before gets converted into support. Similarly, if there's a break from your support level on the lower end, we have an example here. If there's a break from your support level, the same level gets converted into a resistance. Simple as that. So if there's a break, it gets converted into the opposite level. Now, when the level gets converted, what is the reaction that happens? Similar, if the resistance gets converted into support, the price gets pushed higher because support usually pushes the price high. Similarly, if the support breaks, the same support which was giving you a bullish move previously, it'll start giving you a bearish move in the market, and the price is going to fall, right? So these levels, when they are broken, they get converted into its opposite form. Now this works incredible on long term. So if you're not good with technicals, this is the best method to analyze a certain stock and try to understand that where is the price moving and at what point of time can you experience bull rally or bear rally in the market. Yes, they have multiple zones. You call it support, resistance, demand zone, supply zones, accumulation, distribution. There are a lot of names. It all sums up to be a single concept at the end of the day. Now, let's take an example of the same stock that we have from 2006. Okay, that's where you had a big rally on Zipla. If you have a high, you have a high here. We have marked this high looking at these two moments here. Now, what is this? This is called a resistance. Okay, let's go here. What is this? It's called a resistance. Am I streaming properly? Yeah. Now, when the price give you a break from the resistance, what happens to this zone? It gets converted into support. Okay, it gets converted into support. Now, let's take an example. The price has, again reacted. If you look very closely, the price came back to your zone again, right? The price came back to your zone in 2011, and this high were made in 2006. How much is that? That's around 5 years of difference. Yet when the price came back here, it gave you a bull rally because this, which was resistant before, now is support. Okay. Now again, the price came back to your support again. It gave you a bull rally. Plus, another important point that we can understand here is these are not just pure lines. These are zones. So it can react from on a higher end. It can react on the lower end as well. Now, when this happened, we had these few highs that were formed in the market, a couple of highs, one, two, three, four, multiple touches. And when the price came back to these zones again, there is some reversal in the market, right? So this will help you understand if there is a price momentum from one zone to another zone, what is the kind of reaction that you can expect. Again, the price came back to a support, bullish rally, bullish rally. Now what do we have here? We have a breakout. Okay, we have a proper breakout. You can see the price has gone on top and it has given you a reversal. When it gives you a reversal from one point after a breakout, what happens to the zone? The zone being resistance gets converted into support, and there you have a bull rally in the market. Again, the price fell down to a zone and it went high. Again, it went high. So these zones which were formed in 2011 were also respected in 2012 and 13, 14. Also in 2014 if you look closely. Now again, similarly, yes, I'll pick your questions, please drop them. I just finished with this concept. Now again, similarly, you have another zone here. First touch, second touch, you have a breakout, and this gets a little complex here because this there's a lot of sideways momentum being formed here. Let's not get confused, so I'll just ignore this example for you, but it is working very good again in the same zones. Now, here's a good example. In 2015, there were two highs made, right? This was resistance, and we have a breakout from your resistance. That's your reversal, and started taking support from this point. Two times, not just two, couple of times it took support from a certain zone, and the price was bounced back. Right. So the last few years, a decade, the levels still work, and this is the method that you can always depend on to understand uh, the current situation of any stock in the market, not just stocks, commodities, future option contract derivatives, currencies. Even you do it with forex, it doesn't matter. Everywhere, the concept of supply demand works everywhere. Now I'll pick some questions. Kindly drop your questions in the chat option. We'll pick some questions. Can we get some likes as well? Do subscribe. I'm not much active on YouTube these days, but I would love to have some subscribers here as well. Yep. Do subscribe. Likes. I think likes don't matter much. Does it help with the algorithm? Then please do, and that'll be better. Will you show your technical indicators today? See, I'm not much active with indicators. I'm a price action trader. But yes, there are a couple of strategies that you can utilize. I will discuss that. How to scalp in options? That's a very long topic to talk on. That will not benefit the entire audience here because most of us are beginners here. So that's for a different day. You should use everything, Aryan, in the markets to take a decision on a certain point to go bullish or bearish. You need multiple confirmations. You can't do one with anything. Scalping, yes, scalping is very important. We'll do it after I'm done with this session. How to predict next 1 year with a present chart. Simple as that. I gave you an example. Do the same. Supply demand. What is the difference between zones and lines? Which is better? Zones is always better if you are looking on, let's say it depends on the time zone. If you're talking about the one day time frame, okay, you're analyzing on that, go with zones. But if you're analyzing on, let's say, 15 minutes or 1 hour, I would recommend lines are better because on a shorter time frame the reactions are much quicker, right? So lines for shorter time frame for day trading especially, and zones for short term investing. Yes, we'll do more sessions. We will do that. You'll have to join my server for that. We do sessions there whenever I get time, and yeah, that's about it. ITC, yes, we'll analyze that. That's out of the topic again. Taking small profits in a short duration of time is called scalping. Yes, exactly. I'll give you a definition. The scalping is a trading technique where your decision making skills need to be picture perfect. You'll have to take quick decision no matter your PNL. Okay, your in profit losses does not matter with scalping. Your decisions have to be real quick, and it's all about finding the best entry and exit points on a very shorter time frame, 1 minute to 3 minute time frame, and your profits are going to be less in scalping, and your losses are also going to be less. So you're trying to understand, you're trying to take trades with less profits and less losses, and you'll do it multiple times instead of just going with one trade, uh, you know holding it for some time. So that's the difference between scalping. Just search us up on, I think I'll do it here. I'll post the link in the description. If not, just go to Instagram, search us We Trade Daily. You'll get our profile. We are active with content also these days. You'll get the server link in the bio on Instagram. You want to learn more, you can go ahead and do that. In swing trading, do you look for swing highs, swing lows, resistance to buy or breakout to buy? Okay. Remember this point very clearly, okay? When it comes to swing trading, it's all about pattern breaks. 90% of the cases, it's all about pattern breaks in the market. You have a good pattern break, you can have more confidence in a trade on swing. So look for that. There's external factors like opening of lockdown possibilities. Yes, it does. In some cases, we'll take an example, okay? If you look closely, okay, right in Cipla itself, let's say we're talking about 1 hour time frame is good. Okay, now what do we understand by the price momentum is if the price is stopping at a certain zone, again, it should continue from the same zone, right? If it stops here on at 315 or 330, 330 to be precise, the price has to continue from the same point tomorrow or the next trading day as well. But what do we see? We have these big openings in the market, okay? Now, if the price opens above your previous closing, it's called a gap up opening. And if the price opens below your uh, closing, let me give an example. There is no down closing here. If it opens below, it's going to be called a gap down opening. Now, these openings affects the zones as well, right? If there is a very positive news in the country, there will be a gap up opening, or let's say there's a negative news in the country for or a certain stock, there will be a gap down opening. Now, if this happens near to your zones, okay, now that will affect the zones. But to an extent, the zones are respected even on a gap up or a gap down market, depending on how good that zone is and how many touch it has and how long that zone has been performing. So, a couple of reasons with that. Oh my God, so many questions. Oh, what is hedging, right? Hedging is, in layman terms, let's say there are two people in the market, okay? uh, One is they want to purchase a certain commodity, they want to purchase a book. So the person A, I'll take an example here. So what is hedging I'm explaining here, okay? So there's one person and there's another person in the market, right? Uh, Now, what the first person does is he wants to purchase a certain commodity from the person two. So what he does is he purchases that commodity at a certain price, let's say X, okay, and then he thinks, okay, whatever I have purchased, the value of that certain commodity, which is X, is gonna drop down after a point of time. The reason he bought is to make profit when the value increases, okay. He bought it so that he can make money by selling it on a higher price, right? But again, after some time, he feels that okay, it's not gonna go higher. Then what I'm gonna do is I'm gonna buy another commodity from a person. Uh, the second person is nothing but a different trader in the market. He is the first trader. He's the second trader. So the first person is gonna purchase another commodity, let's say Y in the market, to safeguard his first trade that is running. Okay, so the first trade that he has taken, he wants it to go bullish, and after some time, he understands that the market is not behaving according to the way he wants. He purchases another commodity in the market or another derivative in the market, which is nothing but futures or options of a same commodity, which is Y, to safeguard his position. So even if this market, and this is going to be in an opposite direction, okay, if the market goes up, he'll make money from X and he'll lose some money from Y. But if the market goes down, he will make money from Y and he'll lose some money from X. Getting it? This is the concept of hedging. Now you can question me that if this happens, that there will be loss definitely on one side, right? Because there are two trades that will go opposite. Now that is the risk that the trader takes uh, to safeguard his positions. Instead of losing the entire X amount in a loss trade, he would be satisfied with losing a certain amount but still end up in profits. Getting it? That's layman terms of hedging. Okay. A book for basics, yes. It's on my server, guys. You'll have to join my server. Go to Instagram, search for We Trade Daily. You'll get the link in bio. And in the resources, I have a book called The Trading Bible. It's all about price action. You'll get it there, and it's free. It's somewhere like $5.99 or something, but it's free. In futures, please focus option and investment. Okay. Yes. I have the scalping concept in mind. We will talk about it. Difference between demand and supply and support and resistance. There's not much difference with the concept here. There are just different names that are given to these impact zones. Now, demand is nothing but a support area, supply is nothing but a resistance area. There's just a change in name. Should I read a book? Uh, Personally, I haven't read much books. There are just two books that I've read. Both are on the technical knowledge. I've not read books like Rich Dad Poor Dad and all. Uh, I believe more in practical knowledge instead of the theoretical knowledge, especially when it comes to technicals. For investment, yes, you can go ahead and read all these books. What is your highest profit? Now that's again a very. I would not give you an amount. I would say my highest returns in one single trade was somewhere close to 300%. And you have that video recorded on my Instagram as well. You can have a look on day trading with leverage added. Okay, we are done with the questions. I'm gonna move on with scalping because there are few traders here who are here only for scalping. So we'll respect that. Now, right. So what do you see on the screen? We'll remove all these. Now this is called multi-time frame analysis, where each chart represents a different time zone. Just a second. Okay, so we do multiple multi-time frame analysis to scalp a certain trade. Okay, it's in the resources. Uh, yeah, it's on the resources channel. You will get it there. Yeah, I think the link might be expired. I'll update it today after the session. You can download it. Okay, so to scalp, see, let's understand what scalping is. Okay, before we go ahead and uh, get into on how you analyze and all. Scalping is a strategy, not exactly a strategy, a method of trading where you get into a certain trade real quick and you get out with just few points of profits. Normally, if you want to do intraday on Sipla ranging at 800 or so, you can expect return somewhere close to, let's say, 3 to 4 points on intraday. Okay, for an example. But what you do with scalping is instead of capturing all the 3 to 4 points on a rally that you'll be entering in, you will just capture 0.50 pies, or you'll capture 1 rupee, or not more than 1 rupee, I would say, or 1.5. Right? So you're reducing your targets, you're reducing your uh, points that you want to go with, the points by a very short of frame. When you do that with profit, you're doing with that losses as well. So if the price drops down by 0.50 pies or 1 rupee, you will book losses. Similarly, if it goes higher than that, you will book profit. So you're reducing, instead of going on a proper trade for like 3 to 4 bucks or 3 to 4 points, you're reducing it to 1 rupee or 0.50. Okay, that's the layman terms of scalping. For that, you need high intense knowledge on the price changes in the market. It has to be very quick. For that, we need multi-time frame analysis. Let's go with 1 minute for an example here. On a second time frame, 3 minutes is good. You need 5 minutes here and you need 15 minutes here. Okay, so these are the zones that you need to concentrate on. Now over here, you again understand price action. You will try to draw and find these levels in the market. So for that, go back to 15 minutes and start marking your supply and demand zones. So we have our one zone here, we have another zone somewhere close to this. Okay, pretty simple, we have already discussed about it. Any other zones? Let's say on a short time frame, we have a zone here, one touch, second touch, third, fourth, and on. And we don't need a lower end because I don't think the price is either gonna drop till there. Once you're done with zones on 15 minutes, go back to 5 minutes. Okay, what is this? 3 minutes. Here you have 5. On 5 minutes, what you need to do is draw trend lines in the market. Now try to see if there's any past data that you can utilize for trend lines. Yes, you can. If you have a look here, first touch, second touch, first touch, second touch, and you have your breakout, that's your reversal, and then you have your bounce back from your trend line. Okay, now that's the concept of price action. So let's have this here. I'll take it out instead. I'll find better levels. Zoom in a little to the recent moment that we have. If you look closely here, we see that there is a downtrend which is being followed in the market. First touch, second touch, and again there's a breakout. There's your retracement candle and the market has gone up. Again retracement, market has gone up. Right, so this is our one zone, and here you have your second zone in the market. So once we are done with that, once you're done with 15 or 5 minutes, go back to 3 minutes and try to adjust if there's anything required. I'm going to adjust it till here. Yeah, somewhere close to this. Right, so if you look closely on 1 minute, touches, breakout, proper retracement, and boom, bull rally. Now, how do I trade in the market with my setup being set? Okay, with different time frame, zones, trend lines. Scalping doesn't need indicators. There are people who use indicators. They use moving average. RSI is not for scalping. MACD is not for scalping. Moving average, exponential, and simple are the best. But again, there are people who don't use that, so I don't use it. Now, how would I trade? Is I have a setup here. Okay, so what do I see? I see that on 15 minutes I have a support. On a higher end, what do I have? I have a support, and the market has already given me a break, and there's a low which is formed here. Now this low is called a higher low in the market. What do we call it? A higher low. So I'm going to consider this, and yes, when there's a higher low in the market, that indicates bullishness. So what I'm going to do in the live market, when the price drops down to this zone, I would buy here. Okay, the price drops down to this zone, I would buy here, and then I would wait for a very short reversal in the market. Let's say I'm buying it at 836. I'm gonna wait till let's say 836.80. Okay, just 50 pies to capture. Just 50 pies to capture. Get in, get out with like high quantity in the market, and you book 50 points. And if it drops by 50 points, I would be booking losses. So moreover, scalping, you can go with 1:1 because the profits and your losses points are very less, right? So again, here this is one case scenario, right? Again, if the price goes higher, let's say the price goes higher from here and gives me a bounce back. It goes higher, gives me a bounce back. I'm going to re-enter in this trade again. Again, look for 50 points, and my stop loss will be 50 points. Second trade capitalized on. If I book losses, I will be booking losses. I need to get out of the trade and look for another opportunity. And again, if the price balls up, goes somewhere, and comes back to these zones again, I can take a trade. There's one way of looking at it. Another way of looking at the same example is, let's say I have these zones. Okay, do you see this? First touch, second touch. If the price is giving me a bounce, goes higher and touches my levels again, this is where I'll be shorting the trade. Clear cut shorting the trade without any multiple confirmations, because even if the price is breaking this zone, I don't have to worry on that, because I need to capture just 50 to 1 point, right? And it's not a big deal for the price to drop from this level to the next level here to take support, or the next level here to take support. How much would that be? Around let's say around 1.20 pies, 1.20 rupee, right? So I'm capturing 50 points. I am in profits. Again, if it drops down here, that's around 3 points to hold on to, 2.5 to 3. So these zones will repeat, these zones will respect, and it will fall, but only for some time. Even if my prediction is wrong, I will still be making profits here. Even if this breaks out, I will still be making money here because all I'm looking for is 50 points, and it's not a big deal for a stock at 800 to give 50 points, right? I will only book losses when my analysis is wrong and it'll go, my uh, price, or the price will go higher and hits my stop loss. So that is where scalping is risky. Scalping is, it needs a lot of attention, focus, skills, because when you get into a trade, you want to make sure that the entry point that you're getting into is picture perfect. Okay, the moment you get into a trade, it has to behave the way you want it to go. That's how hard it is. If your entry is wrong, you will definitely book losses. That's for sure in scalping. Because if it's giving you 50 points of move, it's not a big deal for it to hit your 50 points as well. So it's about getting into the right time. Now, what do we understand by right time? Do you see these levels here? Why do you think that as soon as the price touched these levels, there were quick reversals, quick reversals? Why did that happen? Again, here also, touched, quick reversals as soon as it touches these levels. So there is a reason for it. Again, over here, touch, quick reversal on 1 minute time frame, guys. It's not a small deal. Over here again, it's a 1 point difference. See, 50 points is easy to capture here. Again, another quick reversal. So it needs high attention to get this process done. Okay, let's pick some questions now. Oh yeah, please drop your questions on scalping. We'll discuss that. Uh, for see, okay, I'll pick your question. Okay, how do you estimate profit and losses in options? Now, you don't have to look at options as profits and losses. That's a very wrong way of going ahead. You have to look at what will be your points that you will be losing. How many points? 10, 20, 30. What will be your stop loss? What will be your targets? Look in terms of targets and stop loss, not in terms of profit and losses. Now, for that, you need to know how to analyze the Greek in the market. You need to know what delta is, vega, theta, gamma. What are these points and how do they affect the market? To fix a target and stop loss, you need to be very good at delta. You have to analyze the delta of a certain strike price of at the money, in the money, wherever you want to go with on different time zone, and you want to see what is the value. Depending on the value, you can set your targets and stop loss on the spot chart, not on the option chart. Okay, I'll repeat that again. You trade in an option, but your stop loss and target will be according to the spot chart. For that, you need to know the option chain analysis and delta. Okay. Again, guys, like the video, subscribe. If you want to join the server, it's go to Instagram, search for WeTrade Daily, and maybe I'll just post it in the description. Uh, Whatever is convenient, and you can scalp and learn more. Learn more about it. For scalping, use limit order or market, which is better. Market is always better to get into the trade. Limit order is better to set your targets. Get in with market, get out with limit. If you have a capital of 10K, how much can you make in a month? Now, that's a very wrong question again. Uh, that's a very wrong question. You should not enter into the market in terms of making money. Just to answer your question, I would say on intraday, usually it's possible. It's anything is possible, guys. I have made like 300% returns as my highest on intraday. It's on my Instagram as well. You can go check it out. I have made 100% returns also. I've made a lot. I've got 100% losses also. I can agree to it. So anything is possible on intraday. For swing, let's say 10% returns per month. Okay, I'm gonna give you some checkpoints. Okay, some good checkpoints. You guys are here from how long? How long have we been streaming? 45 minutes. I'm gonna give you some good tips. Stock market tips, whatever the people call it. Few checkpoints to do options. First is study uh, the concept of strike price. Write it down, somebody, please. If you can share it later on the group, that will really be awesome. First is strike price. You need to know how to choose a strike price. Second, you need to understand what is the implied volatility of the market. Okay, strike price, implied volatility, and then you try to see what is the change in open interest of a certain strike price. Okay, um, strike price, implied volatility, change in your open interest in a strike price. Now, the most important is the delta analysis that you do. You have to understand what is the delta value of a certain strike price, and how many points can you expect the price to move when you have a certain estimated move in the market. Let's say I think Nifty is going to move by 50 points, 60, 70, 80 points. And then if you know that you're having a viewpoint of 50 points in Nifty plus, you should know how much will that certain option move in the market so that you can make money. In India, it's more of Satta Bazaar that we call, right? Most of the traders, guys, most of the traders, they invest a certain amount, 10k, 20k, and they think that, okay, I don't, even if I lose the entire amount, it's fine, I don't care. Just give me like twice, thrice the percent returns from the market. That's how it works in India in options. Satta Bazaar, to be specific. And they are the ones who get trapped, right? Most of the people book losses on intraday because they come here to make money and they get trapped. So don't do that. Okay, the checklist is strike price, implied volatility. Uh, then what do you have? Change in open interest, and the delta analysis for a certain option. These four are very, very important. Take a note of it and study these. Okay, there are materials. Uh, there are materials. If you want materials, again, it's on my server. You'll get it. Study these and then do options. If you don't know any one point among these, then you're not fit to do options. You'll simply lose your money. Yeah, I'll repeat it again. Strike price analysis, implied volatility, change in open interest, delta analysis. Perfect. We have amazing people here. You can copy that. Yeah, you're done with this. So, okay, let's pick some quick questions and we'll close the session. I have another session today. Um, you can drop in your questions. We'll do like 5-10 minutes Q&A and we'll close. Let's be quick, guys. Please drop in your questions. Yes, it is important. It is very important to know these points when you trade options. In India, do it. It's very dumb. People trade not just there are a lot of youngsters who trade options as well, but it's not good. I don't know when Cybis will be live again. He's a little held up with his company that he runs. He'll be active very soon. I'll pass on the message to him. Which site are you using to get these graphs? It's called Zerodha. It's a trading terminal. Get a demat account and you'll have it. It's more about backtesting. Streak is like you can backtest your strategy to see if it's working good or not. I'm not sure with algo trading. I don't do algo trading. In scalping in intraday, how much time should we take, or should we try to follow trend to come? See, I would recommend, especially first of all, it depends on the setup and how good the setup is. But it is important to keep the time factor as well. I would recommend not more than 3 to 5 minutes, not more than that. If you're holding it more than 5 minutes, then it's a very non-volatile stock that you're trading in. Either get your profits hit or a stop loss hit within 3 to 5 minutes. Yes, Grow is doing a lot of marketing. Grow is good for obviously a company doesn't want to have a bad name to itself, right? So Grow is good for long term, but it's not for trading, guys. Okay. Before you guys run away, subscribe to the channel and like the video if you enjoy the content. More appreciation. I would love to do more. That's how it works on YouTube. And if you want to join the server, go to Instagram, search for We Trade Daily, the same channel name, and you'll get it. If not, you'll find it in the description after a few minutes. Thanks, John. I appreciate that. We'll do it. Cool, guys. Have a great evening. Talk to you guys. Bye bye. And also, do another thing. If you like the session, put down your review on the Avalon main chat. Okay, I would love to read your reviews to improve the session and things like that. So write down a review on the main chat about the session, and we can have more like this. Yeah. Server link will be in the description. Talk to you guys. Have a great evening. Bye bye.